following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' tune means it's time once again for the Option Block, your bi-weekly source for all things options related, a little bit of education, a dash of information, and perhaps, on rare occasions, a dose of hilarity. My name is Mark Longo from the OptionsInsider.com. Good to see that I at least crack myself up with my jokes. From the OptionsInsider.com, as well as the Options Insider Radio Network. And I am joined today on yet another truncated all-star panel by two returning regulars. Well, one regular, and one new certainly becoming a regular. So perhaps we'll start there with the newest regular, Sean Fitzgerald, the man holding down the hot seat over at Options Express. Mr. Fitzgerald, welcome back to the show, sir.
Thank you for having me again. Always wonderful to sit down and have a little panel of talking about today's market with you guys. Again, over at the trade desk on Options Express, just like Friday, another busy day on the desk. Interesting today, a lot of questions. Why is the market down? I think people forgot that the Europe woes have maybe subsided a little bit or went away, and all of a sudden, overnight, a little bit of issues in Spain, and people just not really watching the TVs and wondering why they're waking up, seeing the Dow Jones opening down 200 plus points.
They had been lulled into complacency over the past week or so of not much in the way of Eurozone catastrophes to fret about, so they let it slip into the back of their minds, and then bam! It resurfaces to get you unawares. But of course, you said recording sitting down. That's the lazy man's way to record a show, sir. I choose to do all of my shows standing up these days. It's far better for the cardiovascular system. Don't you know that sitting all day is the key to an early death? Haven't you read all the research?
That was in the news a couple weeks ago, I believe.
It's in the news just about every day, it seems like. Sitting is death. So I choose to stand on the show and to indeed live. And speaking of living, if you can call life in Maine living, we are also joined by the rock lobster himself, good old Andrew Giovinazzi from OptionPit.com. Mr. Giovinazzi, how is life out in the sunny shores of Maine?
What's funny is people in Chicago that are sweltering in the heat are making fun of people in Maine when it's like 75 and balmy.
That's true. I have very little to mock these days. That we're pushing triple figures again, triple digits.
And this is somebody who loves Chicago, and that city was nothing but good to me. But, however, we cannot compare the weather in Maine with the weather in Chicago. That, sir, will not do. Will not do.
Hey, at least Chicago didn't make you drag yourself out of bed and onto the trading floor at 5 in the morning like they did out in the Pecos. So we were a little more reasonable out here.
Well, then I had the Pecos and there was no snow. Although San Francisco just replaces snow with fog. It's basically the same. It's the same all year round thing.
All right, and that's going to do it for the geographic/weather block. And now we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. And as Sean alluded to at the top of the show, it was indeed a sea of red across the board today in most of the major indices, with the S&P and the Dow and the NASDAQ all off about 1% today. NASDAQ leading the charge, down about 1.2% on the day, as that index is wont to do these days. It seems to be leading the charge to the upside and to the downside. NASDAQ is just SPX plus these days, apparently. But, of course, we also saw that sell-off leading, not surprisingly, to a resurgence in the old VIX. VIX getting the weekend back and then some. VIX getting quite a bit back today, up about 14% to close around the day. Up about 14% to close at the end of the day here in the VIX cash at 1860. And this is coming off the heels of the last show where Mark pontificated whether or not we were going to be reaching 14 in the VIX anytime in the near future. And apparently we're headed off to the other direction for a little while first before we drift ever so gently down to the 14 handle. Is that still your outlook these days, Mr. Giovinazzi? You think we're going to be drifting ever so gently down, or do you think this is a precursor of things to come?
I think maybe in the August, the August cycle will get lower, but if we were going like we were definitely moving toward the lower numbers for the VIX. But this European thing is now reeled its ugly head back in. Unfortunately, I think it's it's sticking its head in for a while. I don't know how long, but realistically, the market does have to move to finance these bigger VIX numbers. And today, obviously, was a big move. We're down 2% or more at one point. I'm pretty sure. So, would we have gotten there? Yes. Are we going there this week? I think it's going to be tough for this week. And we're also going to have to see how the Europeans deal with Spain. I think 100% of this move was freaking out over Spanish financing. And, the EU gave the signal last week that they're going to let some people lose some money that invest in Spain already. And I think that's freaked people out, and the market is trying to find that value now.
Yes, as both Andrew just said and as Sean talked about earlier, it was indeed Spain dragging us down today, and concerns about the financing out there in Spain that really led to another sell-off. Of course, that was added to by our friends over in Greece with some reports coming out of the IMF that they are planning to cut off funds to Greece soon, which means the odds of Greece becoming insolvent by September just went up markedly. So those two combined for a bit of a double whammy to the old market today. We did close off the lows. I don't recall. Let me pull it up here really quick while we're talking to see how low we got on the day. I was looking at it a lot intraday, and it seemed like we were down about, the intraday low was on the S&P was 1337. So we were off about 1.5% or so on the day. It seemed like that was the most dire, I should say, part of the sell-off.
What's funny is I was watching the VIX Future Premium all day. It ranged from $1 over, and I think it closed near the highs today. It was $1 over when the market was basically at the bottom, and it got lower. It contracted even. It got to about $1 over. By the end of today, we're closer now to around $2 over or more. So the future's doing the thing where it's breathing a little bit. Generally, it's usually a little bearish when the future starts snuggling right up to the VIX cash price, and then you're in danger of going backward there for a little while. And we sold off pretty hard this morning while the future and the cash were like that. As they started to separate, we started coming back a little bit. So, they're putting $2 worth of premium back into the VIX future for August, which is not a small amount for the month we have to go for expiration. So I've seen it higher, but the VIX can still do a lot, and the futures could come in. That's the thing. I mean, that's the whole. I look mostly. I mean, some of the positions we have on are more like based on where the futures are trading, not necessarily VIX cash. Although obviously they are connected. The VIX futures could still drop a buck pretty easily, and VIX can do nothing. So, I mean, they put most of the action today, just put a little bit of Funyun back into the VIX future. So we'll have to see if some of that premium starts to leak out a little bit.
It is interesting to watch those two interrelate and see how much that fudge factor increases between the futures and the VIX cash and the options these days, with so many intermediaries playing therein. You have the ETPs, you have of course the options playing. I mean, it's just an interesting ballet, I suppose you want to be charitable and call it that, to watch back and forth as the VIX futures and of course the options and the cash continue to intermingle. I think you can call it a fudge factor. Is that too strong of a term, Andrew? Perhaps
No, I think there's some fudge factor. I tried to invent a term, something related to Funyuns, because I think my kids just ate one of them this weekend, and they thought it was pretty weird tasting. So I think that's sort of...
Mark it down in the memory book, the first taste of Funyuns. There we go. It's a milestone. Every man remembers his first Funyun.
Exactly, your very first Funyun. But I think we have there is a lot of pitch and yaw in that product right now. It's a
pitch
great
and yaw. There you go. Give it a good aeronautical theme. And
pitch and yaw. That's not anything boaty, right? That's more airplaney.
That's definitely airplaning. You could say starboard and port if you wanted for nautical themes, but that doesn't really apply here. So let's go with pitch and yaw. That's much more charitable.
And I would have been happy to see a little less premium, maybe a little more settle, but there's a good, healthy respect for potential movement in the future right now, and I think that's warranted.
Now, Sean, before we started recording today, you were saying you thought VIX was headed way north, perhaps into the 30 handle and beyond. Is that still what you're thinking here, looking at today's action?
I'm looking at a 2-year historical chart. Right, like I talked about last show, right around this time we started heading north to 30 and bounced between 30 and 40 all the way to December. But if you go back to 2010, it started a little earlier, around June. One day alone, we went from 20 to 39. And I don't know, I can't remember what happened back in June of 2010 exactly on that date. But it seems like as we get towards the end of the summer, the last 2 years, something goes on, whether it's share up, whether it's a bad ray of news, but we tend to bump around 30, 35 come August, the last 2 summers, and I'm wondering if this could be the 3rd year in a row and we not only head towards 30, possibly 35, 40.
It's interesting because last year was obviously a bit of an aberrant year with all the crazy domestic nonsense going on. But, of course, this year we have the Eurozone pitching in, so it could be yet another aberrant year for a completely different reason. We could indeed retest some of those highs, and depending how deep into the Euro trough of calamity we fall. But of course, I think to me, speaking of troughs of calamity, I think to me the real thing that spelled out just how dire things are in the market today were, of course, that not even McDonald's can make money in this environment. When you can't make money selling burgers and greasy fries to an obese American populace, then what hope is there for any of us in the future? If even that business is down, then I think that, of course, McDonald's reported earnings before the bell this morning, and they were not at all what the street was expecting. They closed on the day down about 3% to about 89 roughly on the day, so not a good day for good old Mickey D's. And, of course, they're still a little top-heavy if you look at some of their recent valuations. They're flirting with the upper end of their spectrum. They were trading around 100 as recently as March, so they have a bit of a ways to go to the upside, but they're still relatively top-heavy given where they've been trading over the past few years. But still, it's kind of like Walmart. Whenever McDonald's loses money, even in these types of environments, it really has to make you wonder how bad things can possibly be if people are even curtailing their spending on the $1 value meal at McDonald's.
Well, that's what I wanted to talk about McDonald's. They actually don't have some of the ones downtown, they don't have a $1. They call it a value.
Yeah,
now.
that's
Everything's
true.
like $1.19 or $1.29.
We're in Metro Chicago, though. If you go up to the big rock and roll McDonald's here on LaSalle Street in Chicago, good luck finding anything for $1 in that flagship McDonald's monstrosity that sells gelato and everything else. But a 2-story mega McDonald's. But I think our McDonald's experience here in downtown Chicago is a wee bit, let's say, biased. I mean, the same thing of buying McDonald's in Times Square in New York City. You're not going to find a $1 value meal to be had around there. But you get outside the city a bit. You get outside some of the major metropolitan areas, and I'm sure you can find a burger to be had somewhere for $1. I think our experience, Sean, is a little bit outside the norm in that case.
I know on Clark over there, Wendy's does have that dollar menu still. They're going strong.
There you go. Bring all your business to Wendy's. If you're listening in downtown Chicago, head to the Wendy's on Clark by the giant
you don't
Chase
want to mind standing in line for 30 minutes for that 99-cent cheesy burger.
Admit it, Sean. You just love the Frosty. That's why you go. You can never outgrow a good Frosty, no matter how old you are. Give your kids. That's one to mention there, or to mark in your memory book, Andrew. Forget the Funyuns, the Frosty. Do they have Wendy's in Maine? I don't even know. They sell lobster burgers up there.
Yeah, you know what? There is a Wendy's in Maine. No, you know what? Not near me. Not anywhere near us.
There's to go all the way to Kenny Bunkport to get that good Wendy's.
Yeah, and a couple of Burger King scattered around. But I'm not sure about the Wendy's. There might be one. Yeah, there is. There's one. There's one in Brunswick.
There you go. So listeners in Chicago and now Maine know where they can find good, cheap fast food on the go. But aside from fast food, Sean, you said you were pretty active on the desk today. What? Don't give us all of our Xpress Bock up front, but give us a hint of kind of what you were seeing and what people were calling up, talking about today, and asking about today on the old trading desk at OX.
It was a more of a concern, like I said earlier, like why are we down? Like people were just expecting last week how it was light volume every day, maybe going up 30, 40 points, but it was constantly up for 4 or 5 days and very light volume, and then boom, that whole week of gains wiped out in the first 10 minutes of the day today. People were just kind of caught off guard, I think, by the Spain news and just wondering what they should do. I mean, obviously we at Options Express don't give advice, don't give recommendations. I mean, we can tell them exactly why stuff are down, but then they're kind of just sitting there. Do I sell? I mean, how much longer is this Europe news going to end? And it's kind of like they seem like they didn't realize that it's still ongoing. It never really did end.
It's that perennial question every market watcher has. Why? Why are we up? Why are we down? People always turn to the wirehouses for some sort of reasoning for why we're up and why we're down on the day. It reminds me when I first walked onto the trading floor many, many years ago, bright-eyed and bushy-tailed, and I would see the markets or whatever I was trading closing up or down that day, and I would ask the old-timer next to me, why are we up today? Why are we down today? They'd look at me and say, more buyers than sellers, kid, or more sellers than buyers, kid. I thought they were just being jerks at first, but over time, that cynicism kind of bred itself into me. And I started to realize, you know what? They're actually right. That's about as much of a meaningful inference as you can pull from most of this stuff. So I tend to fall into that more buyers than sellers camp, and it's served me relatively well over the years. But of course,
pays attention to it that way.
Yes. You know, when you start looking for deeper meaning in some of these moves, you start to really. I sometimes read some of these summaries you see on the financial news sites and the wirehouses, and I pity these poor reporters who have to somehow try to make sense of the cacophony because there really isn't much sense to be made quite often, and so you see them struggling to find reason in what's going on, and it's always an interesting exercise, which is why we tend not to engage in that very often on the old Options Insider. Of course, sometimes we can get dragged into that fray when we're talking about unusual activity, and I think we're going to do that right now by diving right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and I love that theme. I can listen to that theme all day. I love that little flourish at the end. It just fires me up to dig up some unusual activity. And what we're going to talk about on the old odd block today are some quick hits, pretty much. I think for the most part, except for Under Armour, these are all newcomers to the old odd block. We're going to kick things off with BCE Inc., ticker symbol, not surprisingly, BCE. And like I said, I love these names when they have an acronym in their title and yet they pick something else for their ticker symbol. Always drives me crazy. But good old BCE Inc. This is a communications company. They handle residential and wholesale customers for, as the man says, all of their communication needs. And today, this is the name, of course, that does about 300 contracts a day, so not exactly lighting up the old tape on any given day. Today, nearly 5,000 contracts, 4,965 to be precise. And pretty much all of those, 4,908 of those 4,965 contracts came in the AUG 40 puts. We saw a pretty massive opening buy on this strike, with someone coming in early in the session today and picking up nearly 5,000. Like we said, most of those coming in two big blocks, a block of 2,000 for about 55 cents and another block of 2,000 for 50 cents on the day. This strike has an open interest of just 150 contracts, so this is all opening paper, and given the lack of ADV in this name, this is going to be open for quite some time, I would imagine. Looks like someone really prepping for some continued downside here in BCE. If you look at a chart, this one's actually been vacillating fairly up at the higher end of its range for the most of the past few years or so. It's dipped down into the 36 handle or so a few times, most recently October of last year. But ever since then, it's really been vacillating in the 38 to 42 range, and we're hovering right in the middle of that now at the 40 handle, or 40 and a half actually, where it closed today. And this trader obviously thinking that there's some downside to be had coming in. Of course, earnings, this is an earnings play because earnings are in August. Earnings are on the 8th to be precise. So this guy's banking that BCE going to be testing the downside of that near-term range down to the 38 handle, or perhaps even south in the near future. Sean or Andrew, any of you guys watch and or play in BCE at all?
That 300 contract open interest was all mine.
It's all you. I knew you love to play. You love to play in the deep waters, don't you? Where there's a lot of activity. Really a lot of stuff to parse.
That is quite something. Funny, it's funny. It's like this is just a telephone company in Canada. Canada seems like kind of they've been sort of insulated from all these shocks. So, this is a pretty, I have to say, very low implied volatility. If he wants to get size short for the earnings, he's going to get plenty of bang for the buck on this trade. It's just where this thing goes. Or what do they pay, like a 5% dividend or something like that?
Yeah, something along those lines. So yeah,
something $2 a year. So yeah, it's almost right there. So it pays a huge dividend, and where's the thing going? So I guess it could see $39, but it's definitely a big bet on the thing going down a lot. So we'll see. In a liquid market, it's just an aggressive big trade. But if you think it's going to tank, it's the right thing to buy.
Yeah, I can't imagine this guy. I have to imagine this guy's hoping for a little bit better than 39. If he gets to 39, he's doing all right, but it's hardly worth all the effort to put all this on and manage it just for that. He wants, I'm sure, looking for a little bit more of a pop. Probably given the near-term actions of BCE, he's probably not going to get much more than that. Maybe 38, maybe 37 in a dire scenario, but probably not much more than that. And speaking of dire scenarios, actually, I really shouldn't be speaking of dire scenarios. This company isn't doing too bad. Of course, they're off about 2.8%. Next up, we're going to a quick put roll here in Logitech International. They closed at $9.06, down about 3% on the day. They have earnings On the 25th after the bell, and of course a lot of you know Logitech. This is the holding company for those for all those peripherals you see in the electronics store. You name it, mice, keyboards, joysticks, what have you. Anything computer related or even a lot of home video related, they make it in some way, shape, or form. So they make a lot of the peripherals you probably have on your desk right now, maybe the headphones you're wearing while you're listening to this show. And what we saw here in Logitech, obviously not a very high-priced name, and we saw someone coming in. Looks like they're rolling an existing position here on the AUG9 puts for some relatively sizable amount of activity. Of course, this is the name that does about 1,000 contracts a day. They did almost 11,000 today, all of that pretty much in one massive put roll. We saw about 5,300 of the AUG9 puts going up today. Looks like a closing sale here on this strike, and they rolled them right on down. 5,300 again on the AUG8 puts. This was essentially a closing put roll here, where he's closing out on the 9 strike, rolling them down to the 8s. Open interest is about 6,600 on that AUG9 put strike. So it looks like this guy is indeed rolling an existing position, and looks like he's prepping for some additional downside, taking some money off the table and prepping for some additional downside going into Logitech's earnings, which are a couple of days from now. Interesting bet. Not exactly a lot of room to run here in a $9 name when you're rolling your puts down to the 8 handle. But c'est la vie, an interesting play. We'll see how this plays out going into earnings, which are in a couple of days, as I said. And last but not least, we have a name that's been on the old odd block in the past. This is Too Bad Sebastian's on here. I know he loves to commentate on ladies apparel makers, and this one, well, this actually is for men mostly, but he likes Lululemon I think a little bit better. But this is Under Armour, ticker symbol UA. They closed today at about $48.38, down about 2.5% on the day. And this name has earnings tomorrow before the bell, so hopefully you got your positions off in UA before the close, because you missed your chance if that's the case. And what we saw, this is the name that was pretty sizable activity today going into earnings. This name's usually been averaging about 5,000 contracts a day. They put up 52,000 today, so sizable activity here in good old Under Armour. A lot of activity across the board here in this name. Look at a lot of strikes. There was a lot of activity. The AUG's 47.5 puts put up 10,000 today. But we're going to focus on one other additional trade that was seen pretty interesting. This was a pretty sizable strangle sale ahead of the earnings tomorrow. We saw someone coming in and blasting out about 6,000 of the AUG 55 calls for 85 cents. And he turned around on the downside and blasted out another 6,000 of the AUG 42.5 puts for $1.40. So if you net that out to $2.25, that works out to about $1.35 million worth of premium that this trader collected here this evening going into earnings tomorrow. And he's got some decent room to run here on the downside and on the upside if Under Armour catches a wind in either direction post earnings tomorrow after the bell. But an interesting trade, a pretty sizable one for Under Armour. If you look at these strikes, Under Armour was just active across the board today. A lot of people trading it up in UA ahead of earnings. Sean, you get any calls out there in UA today on the desk?
Mainly the more popular one that you mentioned earlier, just straight up buys on those $47.5 puts. Besides that, really no particular strategy like spread wise or strangle or straddle, but just a lot of straight up put buying on the 47.5 puts.
Yeah, there was some interest in that strike as well, and that, of course, maybe that was the same player even loading up on the middle of that of those two strikes. It could be as well. So interesting trades going up here in UA. Of course, it wasn't the same block size that we saw with the sales of the calls, so I mean it could be related to paper. But given the execution, doesn't look like it. It doesn't appear to be the same trader. But either way, interesting trades going up here in UA. I know, like we joked, I know Mark likes the Lululemon, but Andrew, you watch UA at all?
No, I don't. It's actually a pretty good trader. I just one that hasn't come across my radar screen. I have to be honest with you. It's not one I've ever traded, even back in my prior life. So it seems to be a good trader, though. I mean, buying that strangle, though. Oh, that guy's selling the strangle.
Yeah, he sold the strangle.
Looking at it now, that's probably. what do we have in our standard 20% sell-off for most of these stocks lately? So even at 48, so he's down to around $40. Yeah, I mean I think it's reasonable. It'll probably pay, but
they're pricing in about 650 here on the straddle. So if that comes to pass, then this guy will still be all right, but he won't be collecting that full 1.35 million on the day. So they're expecting some action here going into UA earnings. So of course, listeners, by the time you hear this tomorrow, you'll know the outcome. But an interesting one to watch, given all the options activity. And speaking of ones to watch, we're going to close out the old odd block for today and dive right into the one to watch, indeed, the Xpress Bock.
The Xpress Bock, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the old Xpress Bock. This is, of course, the portion of the show where the boys from OX hold down the court, and I get to have a seat and perhaps a tasty beverage. So, Mr. Fitzgerald, what do you have in store for our listeners, sir?
Today was a little bit of an unusual day on the desk. Usually we get a mixture of index trades, ETFs, as well as stocks. But with most of the stock earnings coming out Tuesday, Wednesday, Thursday of this week, we were kind of getting slammed with a lot of different index and ETF trades directly, mainly. Really didn't get too many direct stock option orders. Mainly want to start off with about 5 large orders I saw coming in through the desk here. One on the Russell. I had a pretty large sell, 1100, selling the 870, 880 August Russell calls. Gentleman took in a nickel. I mean, you're talking, we got 4 weeks left. Guy got a nickel, 1100 times.
A nickel.
And then the Russell closed. Where did we close at today? So 778, he's selling the 870, 880. So, I mean, he's got about a 100-point cushion here. Taking home a nice little cool, 1,100 times a nickel. I mean, it's not a bad trade. Moving on to the an IWM trade I thought was really interesting. Same trader, actually, selling 2,500. He did an IWM. Also on the call side, selling the 84 calls, buying the 86s. For another nickel. Again, IWM closing around the 77, 78 range. So this would be a pretty huge jump in a month, with the stock having to jump about, I should say the ETF having to jump about 8 points.
This guy's loving the Eurozone right now then.
Yeah, he is. I mean, that's 1,200.
Go Spain, go, he's saying.
He's looking between there and the other trade. But my favorite trade of the day this morning, I had a client call me. He sold 2,000 of the SPX weekly 1275 puts this morning when they were trading at $1.55. Those puts closed off around 55 to 60 cents right now. With the SPX closing around 1345 with 4 trading days to go, this guy sold 2,000 of the 1275s at 155.
Well, I like this trade much better, let me just say, than fighting for nickels on the others.
Yeah,
this guy's already up a buck.
Different trader. This guy came out early and strong. I don't actually know if he closed it or not, but he came out very early. I mean, the high of the day was 160 on these. I actually think he got a few off at 160, but a majority he sold at 155, and these things close at 50 to 60, 2,500 times. So. Actually, I'm sorry, 2,000 times. So, very good trade there so far. I had an interesting VXX trade this morning. This is also on the weeklies. We were selling the $14 calls and buying the 16s. in the price range of 53 to 70 cents. I believe the VXX had a couple runs back and forth today. Closed around 14.06. He sold that for 53 to 70 cents 4 days ago. He's got a little risk here with the stock being above 14 now, but we'll see how that goes. And lastly, my last interesting trade I did see, guy went a little further out on the Russell. I don't believe this was my nickel guy, but what he was going out to September, and he was selling the 660s, buying the 650s, 500 times for 68-cent credit. Again, with the Russell right around 780. He's got about 120-point cushion. Eight weeks of trading to go. Taking home 500 times 68. I'm sure our audience can do the math there, but he's looking pretty good.
You know, we talk about the weeklies all the time here and just what an interesting tool they are. And looking at this guy here in the SPX here who picked up a buck 2,000 times in a day worth of decay on a day when we're selling off. It just shows how crazy these weeklies are sometimes and how inflated they can get. I mean, look at this. Look how much decay he picked up in just the course of a day. This guy should be sending you a nice bouquet of flowers here, Sean. You just bought him, you put a down payment on his house or bought him a very, very nice car or perhaps several. So yeah, not a bad day in the put slinging side of the fence. So the upside call guys are interesting. I've never been a huge fan of scraping for nickels and teenies. I'm dating myself perhaps with the teenies, but scraping for those with those types of trades. Of course, those trades are probably fairly safe overall given what we're seeing in the euro. But yeah, this guy really took it to town here in these XPX puts. So ballyhoo for him. Nice to hear some OX premium sellers knocking it out of the park these days after so many widowmakers like Netflix and everything else and Google cutting people short of late on the short side of the equation. No pun intended. Nice to hear of some winners. I hope you get a nice little, like I say, bouquet of flowers in the mail, Sean.
Yeah, as long as it's not over the $125 a lot.
$124.99. I think you earned it today, Sean. Well, that's interesting stuff. Thank you for that, sir.
I did notice one other thing besides those 5 trades. As most of the market was getting beat up today, once Apple broke through 590 and Google broke through 600, all of a sudden both spiked. Apple going all the way back to 603, Google breaks 600 and goes all the way back up to 615. So I kind of find that pretty interesting. I'm sure that has possibly something to do with Apple's earnings tomorrow. But it was like I was watching them on a correlation on a chart together, and as soon as Apple broke 590, as soon as Google broke 600, they both just took off to the upside.
Well, this may be a good thing to discuss then, perhaps in the listener mail where we have a question about these types of technicals. So perhaps then we'll dive right into that. But that is an interesting point, though, you mentioned before we do that about Google and Apple, because they are so interrelated. I mean, look at what Google just announced a few weeks ago with that tablet, and the thing is they can't sell enough of them. They've literally sold out of that Nexus 7 tablet, particularly the larger size, the 16 gig size. So Google very much in a hardware player, particularly in the tablet space, and all of a sudden they're knocking even more at Apple's door. So, of course, not surprising to see those two names would be even more interrelated given the recent activity we've seen out of both of those firms. Too bad Uncle Mike isn't on the show today because, of course, I'm sure he's hunkered down right now prepping for Apple earnings. That's his big quarterly event. A low BBI day for him tomorrow, I'm guessing. But with that, we're going to close out the old Express block and dive right into the listener mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, and it's Monday. That means it's listener mail day. So this is, of course, the portion of the show where you guys out there get to take the reins and ask us the pressing questions on your mind. And maybe we'll start off with this technical one because you just alluded to technicals earlier in the last segment, Sean. It's a question on the forum from our old friend OptionsVoodoo. He writes, "Hello, Options crew. I was wondering what technical indicators you use when trading on multiple time frames, both day and swing, other than basic support and resistance levels. I know there is a tendency for more novice traders to get into a state of indicator-itis, but I also have good success with the McClellan oscillator. What are your experiences with indicators indicators, and what have you found the best for certain market conditions you're analyzing? I'm still rather confused with the tick and trin. Pound trin. He writes it here in his a little lingo. Thanks for the insight and keep up the good work. OptionsVoodoo. And Sean, since I know you're into the technicals, maybe I'll let you go with this first, because I have disparaged technicals many times on this show in the past. I used to, back when I was actively gamma scalping in a number of different names for a living, all my long premium positions, I tried every technical I could ever possibly find to try to find some ways to have some insight into where to work my scalps from a gamma perspective, and so did every other guy that I ever worked with on the pit, and they would come out with every single name you could possibly imagine. And here's the indicator for today to use to work your gamma scalps. And ironically, the only one I ever saw, or the only ones I should say that ever really made much of an impact for me on an intraday trading basis were the low-hanging fruit nonsense ones like Fibonacci. And that was precisely because they were so low-hanging and they were so widely available, anyone can get that off Bloomberg, that there was a ton of size on those limits. So it made it essentially a self-fulfilling prophecy. And you couldn't trade aggressively off of it, but the underlying would usually hang at those levels for a little amount of time to give you some time to execute your scalps, and you can usually plan one or two bounces or moves off those levels. So after all the investigating I did, I talked about being cynical on the fundamentals earlier in the show. I became very cynical on technical indicators and how much they can really be useful in a day-to-day trading scenario. So perhaps I'm not the best person to answer this. So Sean or Andrew, we'll start with you, Sean, and we'll see, what do you like from an intraday, and what technical indicators as a whole do you like, particularly as OptionsVoodoo asks, when trading on multiple time frames?
Well, tick and trin, I follow to some degree, but not really too much, because when you're looking at tick and trin, you're generally looking at the market overall. So if you're going to be day trading, tick and trin, I really don't think is the one for you. I'm more of a moving average type of trader. I like, obviously, the 30-day, 90-day, and 200-day moving averages. And at times, I will go out to, 1-2 years just check it out from here and there. But mostly 30, 90-day, and 120-day moving averages for myself.
So you stick with the old bread and butter moving averages. Yeah, I tend to look at those as a more kind of a general indicator of trends, but I never really found them that useful on an intraday frame. Of course, he's asking here about multiple time frames. So from a longer term perspective, I think definitely the trends are your friend in that sense. Andrew, I have a feeling you're kind of like me. You're an inveterate, I should say, fundamentalist when it comes to your underlyings and your trends. I don't think you sling too many indicators, do you?
Not really. I mean, I do. I'd always like keeping apprised of basically all the volatility levels, historical and implied vol levels. I like looking at just the VWAP intraday, just looking at stocks that are starting to move around a little bit, and mostly just when the idea for me is if I already see some movement and then I have some accompanying volatility movement, that's kind of a key for me to like pay attention to something if it's worth trading or not. So I like to see price movement and then some accompanying volatility movement, and generally that will set up a trade for me. So, and that's, I just basically, if nothing's going on for me, nothing's going on. So I'm not really looking at, I need to see something move somewhere first before I kind of crosses my radar screen.
VWAP, of course, being the volume-weighted average price, for those of you who aren't familiar with that one. I'm sure most of you out there are. But, of course, you and I, Andrew, and Sean as well, and everyone on this show, really, we tend to look at the market a little bit differently. We're not out there just looking for our fundamentals to trade in and out of the underlying. We have the added degree of really looking at setting up options trades from that. So we have the other components. Yep. We're much more fixated on volatility and premium levels, realized versus implied. That's why I spend much more of my time and my trading time these days looking at those types of indicators and those types of metrics versus saying, wow, what's the Fibonacci say about Google today, or what are the tick and the trin here on Amazon today? I mean, like I said, if you're really actively scalping, I guess perhaps that might be some sort of a way to inform your trading. But yeah, if I do anything, I'm looking at definitely more of the longer term indicators and seeing if the trend is indeed my friend. I know on some of our other shows, the Vol View shows, those guys love the cones, the volatility cones, and you can look at those and see exactly from a vol level, talking about writing beyond and above and below standard deviations, and that's a lot of people like that one as well. So maybe if I have any sort of tools I use on a regular basis to give me a framework of where my trades fall in relation to where the underlying and volatility is right now, then something along those lines. But I'm not out there really slinging too many underlying indicators these days. So I hope that helps you, OptionsVoodoo, for what it's worth. None of us here really too heavy on the underlying technical analysis side. We'll do a couple of quick hits right now from Twitter. Quick question here from T. Duffy. He writes, Facebook, AUG 23 puts for 45 cents, or Zynga. Oh, Zynga, Andrew, your synthetic Facebook. This guy obviously listens to the show. Zynga, July 5 puts for 35 cents. Which to sell? I don't know, Andrew. Maybe I'll let you go first because you love your Zynga. So, but I think you've been burned too much to offer those Zynga 5 puts.
Zynga and I are no longer friends. That was my Widowmaker for the year. I was right. The only thing I was right about is that it would mimic Facebook, as Facebook totally went into the tank. So I was right but wrong.
So this question brings up deep-seated pain for you, sir.
If any, I mean, I think realistically the Facebook puts are probably a better sale than the Zynga puts.
I definitely lean in the Facebook side of the equation. What about you, Sean? Should we make it 3 for 3?
I am not a Zynga kind of guy. I think this stock was done from day one.
Wow.
So you're a seller of the Facebook puts and a buyer of the Zynga puts, and there we go.
I throw Zynga in with the Groupons of the world.
Yeah, I could see that, certainly.
I mean, if you just look at, this stock's at $5. This IPO wasn't too long ago, and we were sitting at 15, 16.
Yeah.
Back in March, we're down 400%. It's. I think
rough.
we might be looking at a pink sheeter here in the next couple of years.
Let's move off this one before we give Andrew fits here. But I think T. Duffy, you have 3 for 3. All of us leaning on the Facebook side of that equation. Last one here, a quick one coming in here. Another Twitter question from Greg Persky. He writes, and I love parsing the Twitter lingo, trying to figure out what the heck people are talking about with all the acronyms and the abbreviations. But he writes, downside in buying deep in the money calls 2 months out and selling the comment against it. How often no initial pop after 20 days? Well, the first part is pretty easy. What you're doing there is asking what is the downside in buying a deep in the money call and selling 2 months out, or however you want to do it, and selling the comment against it. This is kind of the inverse of the covered call we talk about here on the show all the time, where you're usually buying the comment and selling the option. He's doing the reverse. He's using a deep in the money call. So all of you out there who are familiar with your synthetics, and it should be all of you if you're listening to the show or have been for a while, you have to realize that, of course, by buying this deep in the money call, selling the stock against it, you're synthetically buying a put, putting on an equivalent put position. So the downside in that position, and he seems to allude to it later on with the second half of his question, is, of course, a severe upside movement. That's kind of the last thing you want in that scenario. But his second part of his question, I'm not sure what he means. How often no initial pop after 20 trades? I really couldn't tell you. It depends what the underlying is you're looking at and what you're trading.
By buying an in-the-money call and selling stock against it, he's really buying very out-of-the-money puts.
Yeah.
And if he's telling himself after 20 trades, hey, how come I'm not making any money buying really out-of-the-money puts? Well, if the stock doesn't really tank, you're not going to make anything.
Oh, I see. Maybe you think he's saying, I've done this 20 times, and how come I'm not making money?
Exactly. I think so.
That's even better.
That's how I, maybe that's
wow. Well, then my advice would be trade something else.
Yeah.
I keep hitting my head against this wall, and it keeps bleeding. Why is it bleeding, doctor?
Yes. I think he might be happy. He was probably happy today for 5 seconds when the VIX exploded, and the volatility went up. And he's like, "Oh, my 30-cent puts went to 45 cents," and then probably just as fast they evaporated again. So,
yeah,
I think he's got to look. It's as usual. You always want to know the position that you actually have on. What does it actually do? So.
Yeah, sounds like he knows, because he asked about pops, so I'm assuming he knows a pop is bad. I'll give him that. I'll be that charitable. But yeah, it's a kind of a bizarre question to parse, but a good one to just to reinforce the nature of knowing your synthetics and knowing what the heck you're trading from a risk management perspective. And that's going to do it for our Monday listener mailbag. And now we're going to dive right into our Around the Block segment.
Around the Block.
All right, and welcome to Around the Block. This is, of course, where we dive into what we're looking at on our screens for the rest of the week, or at least for the next few days. And as we alluded to earlier, there's a lot coming up this week. Probably the biggest one, I'm sure right now, Uncle Mike is sitting in his office just pondering the future as he waits for Apple tomorrow on the 24th. Probably the biggest one on the horizon right now. That, of course, we've joked many times, probably only really half joked, that Apple is indeed its own index these days, and where Apple goes, the market tends to follow. But Apple isn't the only big name this week. We talked about Facebook earlier, selling the AUG23 puts in Facebook. Facebook has earnings on the 26th. We have Ford, another name we talked about quite a few times on the show recently, trading around 917 today, closing at 917. This one has earnings on the 25th before the bell. So if you trade in Ford options, by all means, get your trades on tomorrow before you're out of time. Also tomorrow, in the wake of Apple, we have Netflix. The former Widowmaker maybe has been usurped by others in recent months, perhaps Zynga. But Amazon also on the 26th. Tesla, too bad Grigas isn't here. He and I always love to joke about shorting Tesla. He and I have done that many times in the past to relatively decent results. And of course, Andrew's favorite. This is perhaps your Cisco to Uncle Mike. Zynga is your Cisco, and that is on the 25th. So those
I only watched it go down $2 though. That was pretty much.
Okay. I know there are certain names I'm not supposed to bring up with certain people. Cisco is Uncle Mike, and Zynga shall be yours going forward.
Zynga will be my. I am now officially on the train.
Zynga is your albatross, sir.
Right.
All right. Anything else you guys are watching coming up this week aside from the madness out in the Eurozone?
Yeah, I'm watching. I try to put on some FXE time spread. Put time spreads a little out of the money on the close using the weeklies. They were not. Nobody was in a big rush to sell any of the August premium, so that was for me just kind of the trade to sort of hedge a few other things I got going on, and I think, that was the number one thing that I was looking at anyway.
What about you, Sean?
Oh, we got some earnings on Wednesday that basically going to give us a sign of maybe which way this economy is going to go. And you already mentioned Ford. We also got Caterpillar. We have Whole Foods, Boeing.
Whole Foods for the hipsters in our audience.
Yeah, we got Crocs. People still buying those.
Again for the hipsters in our audience. Perhaps the anti-hipster would be the Croc buyer, I think.
And we also got Cheesecake Factory as well. So we got some pretty big names on Wednesday. For the morbidly obese
in our audience.
They're going to follow tomorrow, where you have all the big boys. The Netflix, the Apples, Broadcom, Peabody Energy, Under Armour, and lastly, my favorite, Buffalo Wild Wings.
There we go. Where Buffalo goes, the market is sure to follow. But a lot of good stuff from an options trading perspective this week. Certainly enough to keep you active and keep you busy. If you can't trade one of those names, or if you aren't, then you're missing the boat, because there's enough activity to go around. That's why we love earnings season here on the Option Block, because it gives us something fun to talk about from an options perspective. But unfortunately, that is going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. I, of course, want to thank my compatriots for joining me on the show today. Starting off with you, Mr. Rock Lobster. What is coming up in the land of the pit, sir?
I guess we will start our monthly. We do a free webinar every month. I believe it should be 2 weeks from now. But the big news is we are moving on downtown to the Loop area, to the former stomping grounds for Mark and Andrew. So we'll be next to the CBOE.
Finally getting out of the sticks.
Yep, and so things are going good, rolling along, and that's where we will be as we look forward to year number 3 at Option Pit.
And Mr. Fitzgerald, what is coming up in the land of OX, sir?
Oh, Wednesday night, if we have any viewers, clients of Options Express, or anybody, we have a free Options Express, what we call Site Night in Detroit. We'll be at the Westin Southfield in Detroit. It's going to be from 6 p.m. to 9 p.m. Eastern Time. Basically, what we're going to be doing is learn more about strategies that harness options volatilities. We'll be taught by a former market maker who is now an educator of Options Express. His name is Joe Cusack. In this session in Detroit, Joe will be explaining volatility trading tactics balanced with the potential risk and rewards associated with them. So if anybody's in that Detroit area, again, that is in the at the Westin Southfield. It's 1500 Town Center in Southfield, Michigan. It's free for any Options Express clients or anybody in that Detroit area, 6 to 9 p.m. Eastern Time. To read more about it, visit optionsexpress.com. Go to the events section.
Thank you for that, Sean. And for any more information on any of the topics we talked about today, the unusual activity, the trading activity, the education, or perhaps to join our listeners here in the old mailbag, then by all means, surf on over to theoptionsinsider.com. You can post your question there in our forum. Just surf on down to listener questions for the option block. You can also reach us via Twitter, like a lot of our users did today, or Facebook, or any number of other ways you want to reach out to us. You can even shoot us an email at questions@theoptionsinsider.com, and we'll get those. And just make sure to put in the subject line which show you're sending your question for, and we'll route it to the appropriate show. But that is going to do it for the show today. But of course, before we go, all of us here on the old All-Star panel would like to thank all of you out there in the listening audience for downloading and streaming and subscribing to this show and making it such a success. And I'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.